As far as building wealth is concerned, it's an incredibly effective time to do so if you know what you're doing. During this time of financial crisis, you'll have the opportunity to dramatically increase your net worth by building wealth at a once-in-a-lifetime rate. It's widely believed that the greatest wealth is made during recessions. I think it's not too difficult to see how we have already prepared ourselves for this time. 9 out of 10 CEOs are prepared for a recession. As a result, 97% of the time, CFOs will cut costs by 10%, which will cause the stock market to drop another 20%. The recession is a normal occurrence, even though it may sound negative at the time, and it happens all the time. It's possible to take advantage of some incredible opportunities and discounts that will enable you to position yourself for the rest of your life. Even Buffett has said that bad news is a favorable thing for investors. In this video, we'll discuss the forecast we expect over the next 12 to 24 months. There are several benefits that you may be able to take advantage of at this time that you may be able to benefit from. Also, we'll discuss ways that you can maximize your income by making sure that you are well positioned. We show you how to manage the stock market and cryptocurrencies as well as personal finance at our channel, Crypto Castle. Make sure you check the notification bell whenever we post to make sure you don't miss anything. Do not hesitate to like, subscribe, as well as share. As the economy is threatened by a recession, people are concerned about the possibility of losing their jobs. As a result of decreased consumer spending, unemployment rates tend to rise during a recession. It is common for a company stock to decline when it earns less money. Employees and investors are wondering if there are recession-resistant industries. 2023, it's widely believed that a recession will occur, but experts are divided on when it will occur. We're officially in a recession every time we're officially in a recession, which is defined by the National Bureau of Economic Research as the absence of a significant growth in GDP for 2 consecutive quarters. This has already been defined as the absence of a significant increase in GDP due to the fact that GDP is a lagging indicator. Recession effects can be felt long before they're officially announced. It's imperative to understand what you're going to face in order to prepare yourself, and a recession is a very solid starting point. The recession is usually accompanied by significant increases in unemployment and wage decreases. In addition, there's a loss of customer confidence, all of which can be seen as an indication of what is taking place. The result is a downturn in everything from stocks to food to energy to even services, all of which can be attributed to this factor. Earnings tend to decline during a recession. Companies usually report their revenue and provide a forecast of their future prospects every quarter. As a result of the sluggish or even negative growth they've experienced lately, companies have decreased their projections. As a result, the risk of recession has increased by 10 years. And the third factor is layoffs. When consumers earn less, they spend less, and when companies see a decrease in demand, they decrease their expenditures, leading to the layoff of employees. There are some ways to become rich during the recession in 2023. If you do a quick Google search for mass layoffs in the year 2022, you'll find dozens of companies who are cutting their workforce in order to survive the recession. Here are some ideas about how you can make the most of the 23 recession in order to get rich. Keeping track of your income, cutting unnecessary expenditures, operating on a lean budget, and reinvesting on a regular basis are important steps to saving money. You should also outline your plans in the event that your income decreases by 20 to 50%. How you will cover that difference, as well as whether you can take preventative measures to prevent a similar event from occurring. As a second piece of advice, you should always keep a small cash cushion on hand at all times. It's statistically better to invest your money as quickly as possible, but you might find it comforting to always keep a little money available so you can make the most of any opportunity that may present itself. It is a necessity to protect your career. In order for you to be safe, you need to have the most effective hedge in place. After all, you don't need the market to go down. It's important that it goes down when you lose your job and you can't hold on to your investments anymore. We need to improve, learn new skills, double down, and take advantage of everything we're giving the chance to do. In order to achieve long-term investment, you need to invest for a lengthy period of time. I strongly advise that. When investing, you should not invest money you might need in the next 5 years, and preferably for much more time than that. In investing, you should always be doing what you're doing while doing nothing differently, because that's the most sensible thing to do. Consequently, if you can average buying into the market on a regular basis for a considerable period of time over the long term, it's the most profitable way to do business. Continue to buy and stay in the market as long as you can. The most effective way to avoid panicking is to diversify your investments. A portfolio of large cap stocks and international stocks can, for example, be supplemented by investments in U.S. technology. If you can handle a 20% drop in price without panicking, then you may be investing too aggressively. Aside from that, there are always some options for investing in real estate, where rents tend to be more stable. If there are more legs in your portfolio, it's less likely that it will collapse even if 1 or 2 legs decline. The economy can be difficult to predict during recessions. Nobody, even experts, is able to predict precisely how it will perform. When the economy sends conflicting signals, a slump may be more likely, such as plummeting real estate prices. It's a well-known fact that the unemployment rate is extremely high during a recession. Although the job market is stronger than ever, many industries are still experiencing a labor shortage. Some economists are not yet willing to pronounce a recession. In an effort to slow inflation, the Fed has already hiked interest rates several times this year to slow the potential. Some experts are concerned that the Fed's interest rate policies could adversely affect the potential of inflation. Experts predict that even if the higher interest rates do slow the economy down and lead to a recession, it will be mildly severe. According to a Reuters poll conducted by the majority of economists, unemployment is unlikely to spike sharply over the next year. When markets are down, it may be more affordable to buy stocks, as many stocks are on sale at the time. However, not every company can recover from a recession. When purchasing a company, make sure they're investing in one that has the potential for long-term growth. Identifying your industry is critical. Some industries are recession-proof. People will need stable goods, such as detergent and dog food, but they may seek out cheaper alternatives. People continue to need fuel for their cars or heat their homes despite their efforts. In addition, if you sell cars, you may feel squeezed since people tend to wait to purchase or seek out used deals rather than brand new ones. In addition to understanding the dynamics of their industry, effective executives also understand its segments. You should seek answers now rather than after you've already experienced the effects of a downturn. This is because you are concerned about the potential impact of yourself or your industry. A recession may force you to cut costs, so look for ways to do so, such as eliminating unnecessary services or travel expenses. This may also be an ideal time to discuss ways in which leaders and department heads can reduce costs as a whole. Moreover, this process is a great way to convey to the company as a whole the importance of keeping a thrifty attitude, that is, protecting the bottom line and showing shared responsibility, which is why even small savings add up over time. In spite of the fact that some experts believe that a recession is becoming more likely, no one can predict for certain what will happen. However, you stand a much better chance of surviving a recession by investing in companies that are strong and holding these stocks for a long time. We've got more in-depth information about crypto markets on our channel. You can like and subscribe to our channel to keep updates on the latest crypto news. If you have any questions, feel free to leave them in the comments, and we'll see you next time.